So, how much money do you need to make in order to qualify for a VA loan? Well, again, as I always recommend, talk to a loan specialist to figure that out. They're going to know exactly what you qualify for. But just like credit, the VA does not have any specific income requirements, meaning debt to income. Okay, so what's your debt to income? Debt to income is simply a ratio, a comparison between how much you owe plus the new mortgage compared to or divided by your gross monthly income. That's your total debt to income. Your housing ratio is the housing payment divided by your gross monthly income. Most of the time, loans will have minimum requirements for both. Okay. However, again, VA is very different. They don't set any requirements. There's not a maximum front end or back end ratio on your VA loans. So, what this means is, again, just like with credit, though, that's still an added risk. And the lender might put those overlays, which, again, if you haven't watched the other video, an overlay is other requirements or other guidelines being placed over top of the natural guidelines to the loan program to protect that particular bank. Okay, you'll typically see it when a bank is owning their own loan, meaning servicing their own loans, but you can see it anytime. There's plenty of lenders out there that have specific overlays, which again, it's why it's important to talk to lenders who don't have those overlays, or someone where we can shop around and talk to different companies to see, okay, do you have an overlay for this? Does this fit? Does this fit your requirements? Not every lender is built the same. So, although there may not be the debt to income requirement, there still is a requirement for what we call residual income. What in the world is residual income? I know. Residual income is basically how much money, or what percentage of how much money is left over after we take into consideration things like childcare. Some underwriters will want to estimate utility costs and things like that. So they would take your income, subtract out the mortgage payment, your debts, and then what you pay for childcare expenses, other estimates they might put in there. And it has to be within a threshold that's approved by the VA in order to get the loan through. So if you're a lender watching this, please be careful. Even if you get that approved eligible, make sure your client passes the residual income. And if you're a veteran, again, thank you for your service, or an active military, thank you for your service. I encourage you to ask your loan officer, hey, what is my residual income limit, or do I pass that? Okay, because you don't want to go under contract, get halfway through the process of buying that house, only to find out you now need to put a down payment, or you can't go VA with the loan, or worse yet, you don't want to find out you can't buy the house at all. Okay, these are things that a professional lender can look at and evaluate prior to you going under contract.